In this video we'll talk about important price model of Bitcoin, the most famous one, which is the stock to flow model, but from unique point of view. So if you don't know, stock to flow model was built about the scarcity of Bitcoin, which we all know about. But there's another thing. It's the production of the scarcity commodity and the halving. Basically, Bitcoin halving is when the reward from mining Bitcoin is cut to half each 4 years. Stock to flow model existed while ago, but it was only applied to gold and silver. Remember, rare commodity with limited production. Gold has the highest stock to flow ratio with 62, as it would take 62 years of production to reach the current level of gold stock. Silver has a ratio of 22, while Bitcoin is currently at 27. These high stock to flow ratios make gold, silver, and Bitcoin monetary goods. Before jumping to the model, like we used to, I am biased. I'm only trying to give you multiple points of view and all information about it, so you can create your own opinion and make your decision. So there's some flaws stock to flow model. The main criticism around stock to flow comes down to two main arguments. First, some say the assumption that gold's value derives solely from scarcity is inaccurate, and that's what the Bitcoin stock to flow is about. There's a lot of usage for gold, and one of them is important to economic, which is the gold reserves that the federal bank is holding. I hope to see Bitcoin in such position in the future, but until then, Bitcoin is only store of value right now. Second, others think that the use of linear regression might lead to imprecise predictions. The use of linear regression to chart the stock to flow model poses a high probability of spurious results, because many random data points can be fit into the model as a result of the regression. But it is difficult to state that the stock to flow model is correct or flawed, because there is not enough data to definitively reject the predictions made by the model. Especially it was working, at least until while. Let's understand what I meant. Right here we have Bitcoin stock to flow model. We can notice three things right away. First one is the blue line, which is the price. The Bitcoin should follow according to the model, and we can notice a very important thing we will need after a couple seconds, which is the line is not straight anymore. We could see a line or parts which it would be the bullish cycle, and it starts after the halving day with a little bit, and we could see the flat parts which should be the bearish cycle. Despite in the bearish cycle the price can fall by 50%, not increasing in sideways like the model is saying. The second part we can notice is the price of Bitcoin starting from 2011, and we could see it a colorful way that shows us the days left until the halving, which is according to the model, the start of the cycle. Despite the flaws, we can see how accurately it was. At least it was accurate by 80%. When the price eventually is returning to the price model at the end, even after going up so crazy, away from the price model, or going down in the bearish cycle, at the end it just returns to it. So in that case, are we going to 100,000 eventually? Well, let's see the common things from the past data to analysis, if we are going to do it soon or not. Right now, let's say that the price model is separating the chart into two different parts, the upper and the lower. When the price is diverse from the model, it must be in one of those two zones. And as you can notice, we are in the lower part, because according to the piece model, we should be around 66,000 to 107,000. But we are below than that. Let's go back a little bit and see when the last time was when we were at the lower part. We can see it was back then in 2019, when the price was 3,000 and a half. But the price of model is telling us we should be at 7,000. By now I can notice something. At this part when the price was 3,000 and the model expected to be 7, we were 50% down from the price model. But after only 4 months, we hit the price goal according to stock to flow price model. As you can see now, it's same thing. The price model expect us to be at 100,000, but we are only at 50,000, which is around 50% down from the price model. Now that was the similar part. Let's jump to the different part. Remember when I said the price model is not a line anymore? And we would use this information after a couple minutes. Now it's the time. As you can see, the flatter the line the easier it is to hit the stock to flow model price. So at 2019, you could see the line was flat, so the model price was not progressing so fast. That's why catching it was so easy for us. but right now the price is still in progression phase until October 2021. So basically I'm saying that according to the past data and the similar with different patterns, we could notice that hitting 100,000 is easy for us, and I would say that we would hit it around the end of the year and at the beginning of the new year. I am preparing another 2 models to analysis besides stock to flow model, so make sure to click that subscribe button to get the notification. That was the video of today. I hope that you learned anything new. Till the next time, goodbye.